All right, everyone, a very good evening to each and every one of you who are present for today's third live streaming session. I hope you all are having a wonderful day. Today being the 15th of November 2024, today being a Friday, I'm pretty sure most of you are already getting ready to have fun, to relax, to enjoy the weekend, correct? So right now we are covering today's third live streaming session, and in today's third live streaming session we are going to be talking about advanced technical analysis, right? So I hope everyone is ready to learn. All right, today there's during today's session, right from morning till evening, right? We have been having three live trading sessions. And today, because the Indian stock market was closed because of Guru Nanak Jayanti, we wanted to utilize this particular opportunity where we could shift our focus from looking at the Indian markets to looking at the international markets and learning more about technical analysis. All right. So I can see Sophia in the house. Hello, Sophia. Good evening. I hope you are having a great afternoon, and I hope you are all set and ready to have a great weekend as well. All right, so let me start today's live streaming session with a quick introduction about myself. My name is Harsh. I have 8 years of trading experience, right? I have been trading various markets such as the Forex markets. I have been trading the commodity markets, which include oil, gold, silver, as well as US based indices such as the S&P 500, the Dow Jones 30, and the Nasdaq 100. All right, so I am more of a technical trader. I specialize in technical analysis such as supply and demand, price action, order flow analysis, swing analysis, wave analysis, and also Fibonacci retracement analysis. The list of technical analysis is quite extensive, right? But nonetheless, these are the major concepts, right? When we're talking about technical analysis. Now, I have been blessed. I've had the opportunity to learn from some of the best minds in the financial markets. I have been trained and I have been mentored by people who used to work as flow traders on the Chicago Mercantile Exchange. Now, based upon their guidance and their have learned so much when it comes to the financial markets, and I'm truly privileged to be a part of their learning community. I am proud to say that I have successfully handled more than $20 million worth of portfolio, and have also been successful in generating around 30 to 35% of profits on an annual basis. The reason I'm disclosing all the information first on hand on is because I want you to believe and be rest assured that whatever information that I am providing to you is provided by someone who is qualified, who has the experience and the expertise in the financial markets. So here we at Dolphin Markets are doing our best in terms of providing you with valuable content, right? Content in terms of analysis, in terms of stock opportunities, hot stock recommendations, in terms of education. So when you're getting the trifactor benefit, right? This is the best service that any brokerage firm can provide to you. We always emphasize in terms of our trading capability. When the stock market is open, we provide you with real time analysis as well as real time trading opportunities that can make you money, right? When you want to make money, that is exactly what we are trying to showcase you in terms of where we are entering, what is the price or what is the name of the stock that we are recommending, the opening time, the direction, the entry point, as well as once the trade starts to run in our favor and is approaching target. I even provide you with the closing date, the take profit, at which price level we had closed at, and what profitability we had generated. So I'm sure everyone is quite aware, but for those who are coming to this particular live streaming session, I just want to showcase you that yes, right from 18th of September all the way till 7th of November, we have been capable in providing you with consistent profitability returns, right? We are not talking of one or two or three trades. We are talking about consistent trading and consistent profit, right? So over a span of 2 months, right? Today being the 15th of November, we had initially started taking our trades and booking profit right from 18th of September. So it's almost been 2 months, close to 2 months. So in almost 2 months, over a span of more than 34 trades, we have been able to generate a profitability of 135%. We are talking about cumulative possibility, right? Taking trades regularly and closing trades regularly on a profitable basis, right? The average profitable size per trade for us stays at 5%. Many of you would be asking, but Harsh, why 5%? Because we have analyzed, and throughout our analysis and with time in terms of providing you with trading opportunities, we have understood and we have figured it out that 5% profitability target is where prices are practically, achievable on a regular basis, where price can achieve that particular profitability. And our main goal is to take trades consistently and make money consistently, right? Making profits consistently. So I hope everyone understands the value we are providing. We are providing you with a clear structure in terms of where to enter, what price to enter, which stock to enter, as well as the 5% profitability. We have trades that have been taken and that have been squared off at a profit. But we also have trades that we provide to you on a real-time basis, certain trades that are currently running. For example, you can see we had provided yesterday a trading opportunity on RBL Bank, correct? So this particular trading hot stock recommendation was provided to you on 14th of November with the stock code of RBL Bank listed on the National Stock Exchange with an entry between 150 and 153 and our 5% target at 158, 162. For people who want more number of targets or elongated targets, we provide those values as well, correct? So we are providing you with a target 1 as well as a target 2. As you can see, the reasons target 1 and targets 2 are not followed by us is because we are currently in the process of showcasing, are we able to take consistent trades, are we able to generate profits consistently, right? So that is the entire process. The last couple of trades that were taken and closed, we are talking about two trades that were provided on the 7th of November. 7th of November is exactly last Thursday, right? Last week's Thursday. Two trades taken on the 7th of November. We had closed those trades respectively on 7th of November. So one trade was closed during the same day. And the next trade that we are talking about is Ashima Limited that was taken on a Thursday, last Thursday. And we had closed the trade last Friday. So within a span of just one day, we have been able to generate 5% and 7% respectively. Cumulatively we are looking at 12%, right, in just 2 days. That is the potential that we are providing you. These trades are recent trades. We are not talking about trades that have been placed maybe a couple of months back or a couple of years back. We are talking of trades that have been placed last week. So if it is possible last week, it can be possible in the coming weeks also. Remember, today is Guru Nanak Jayanti. The markets have been closed since morning. Our main focus has been from the stock market. Today, we are currently focusing on the international markets, the Forex and gold markets, right? In the first and second live streaming sessions, we were covering points related to the basics of technical analysis. And as and how we progressed, we kept on elevating the complexity. We became more advanced in terms of providing you with technical analysis. So I hope everyone has attended the first and the second live streaming session. We have provided good amount of information, right? A very good amount of knowledge and information as well. So let us quickly start with what exactly today's title. As you can see, it's based upon advanced technical analysis, right? How many of you are ready for today's session on advanced technical analysis? I'm pretty sure every one of you are aware. Let us dive directly into advanced technical analysis. Previously, we had been focusing more on the Forex pairs, right? So we had discussed all the different types of basic and mid-level technical analysis on the Forex pair euro dollar. But now we will be shifting to gold because I have been getting a lot of comments telling that, Harsh, could you show some technical analysis on gold also? Please understand that technical analysis, the beauty of technical analysis is that you can trade on whichever financial instrument you prefer. Whether you want to look at it in the Indian stock market, whether you want to look at the UK stock market, whether you want to look at it in the US stock market, or you want to look at it in the international markets such as Forex, gold, different kinds of commodities, or even CFDs, correct? So that is the beauty of technical analysis. Now let's look at gold. All right. And now today, this particular live streaming session will be focused towards advanced technical analysis. So let us start with advanced technical analysis. So the first point in terms of advanced technical analysis will be about manipulation, right? Manipulation. So people are asking what exactly is manipulation. I'm pretty sure you must have heard the term manipulated, right? I got manipulated by a person, or a company manipulated me by deceiving. So manipulation is something that is, skewed, that is altered with to create a different picture when in reality it means something else. So that is the meaning of manipulation. Now let me show it to you based on charts. Please understand the market is a zero sum area, zero sum game. What do you mean by zero sum game? There is a valve of, let us consider the market to be a valve. I hope everyone understands what a valve is. A valve is a system, or a structure in which only, whether it's a product or whether it's a fluid, can enter from one direction and can only exit from the other. So the stock market or the financial markets in general is a zero sum game. What enters has to exit. There is no additional entry points, and there are no additional exit points. If someone is making, someone is losing, and if someone is losing, someone else is making. That is how the markets function, right? I'm talking about the financial markets in general. So if someone is making and someone is losing, and vice versa, so it is quite important to understand what exactly do we mean by market manipulation, right? Now when it comes to market manipulation, let me talk more about it in terms of showcasing it to you on the real charts. Remember, whatever we are seeing right now is based on charts, right? Yes, the data is a little based on past data, but it has happened in the past. And technical analysis is clearly, stating that if something has happened in the past, the probability for it to happen in the future is also similar. All right. So let us talk about what exactly is market manipulation. Let me start by using circles. We talked about pivots. Right now, I hope people have attended the previous two live streaming sessions, because it is very important to know exactly what a pivot is. So as you can see, I have marked certain points which are called as pivots. Now for those who do not know, let me just give you a single line answer. Pivots are turning points on a price chart. Let me use a path to showcase. So prices had been in a bullish movement, right? Bullish had been in a bull trend. Now you can see prices every time they had been coming to an area of pivot, right? Let's start with the first pivot. So I hope people can see the two circles, correct? We are going to be focusing on those circles. Let me use a highlighter. So points such as this have been called as pivot areas, and I'm pretty sure people are aware that there is something called as support and resistance. So let me mark the above line as resistance and the below line as support. Now, when prices are coming to an area of resistance, you can see that the market has manipulated. Let me use a paintbrush, otherwise the highlighter is too thick, correct? So let me use a paintbrush. First, let me just mark the lines and then we will start to use the paintbrush. Now, I was talking about prices that have been, creating pivots. Now that the price has come to the corner of a pivot, it's known as a place of resistance. And similarly, on the opposite side, it's a place of support. Now that prices have come closer to the resistance, the general consensus is that prices should hold resistance. But as you can see, price has manipulated, not once but twice. We had a manipulation. When prices get altered, when they should be holding, prices do not hold. Yes, the direction eventually for prices to continue down happens, but only after the manipulation has taken place once and twice, not just once, twice. During the second time, you could see that there has been a correction. It is the third time when the real manipulation takes place. So, what do you mean by manipulation? Let me draw it out using a rectangle. Areas of resistance, areas of support and areas of resistance, when they are taken out by the opposing force, right? Here, in terms of, we are talking about resistance, so the opposing force is going to be what? Bullish force, right? Bullish pressure. So we have support, resistance. They are manipulated, right? Manipulated means they are altered. They create a different picture. So such areas are taken out. When such areas are taken out, those areas are called as manipulations. I hope people are able to understand. Let me use this. These areas are called as manipulation. So certain areas which should be holding, right? All they do is they get manipulated. What is manipulation? Getting altered. So prices are pushed to a further extent where people sitting or who people had decided to take a shot when prices had fallen to repeat a similar pattern in the future. Prices came to the area, but prices had been manipulated, they had been skewed, they had been disoriented, correct? Because, like I had mentioned, market is a zero sum game. What enters has to exit, right? So market is a zero sum game. Prices did exactly that. This exactly is what a market manipulation looks like, correct? So market manipulation is nothing but prices skewing the previous interest, areas of interest. Like this particular area is a pivot as well as it is a resistance area as well, correct? So, nonetheless, prices came to the same area, manipulated by stopping out people. The more prices were fluctuating, the more we were, the more people who were thinking that the prices would continue down, they got stopped out. But eventually, after the manipulation, what happened? The prices continued lower, correct? That is the entire basic, explanation when it comes to market manipulation. It's interesting to know and it is of vital importance for people to understand because market manipulations are always happening, whether you like it or you don't like it, correct? So, hopefully, people start to understand this is the first concept that we are talking about, and that is market manipulation, correct? Now, let's look at some other examples, all right? In terms of market manipulation, let us see. So prices have created higher highs, rather than the resistance holding. The prices went above the resistance, creating a manipulation, stopping out people who had previously expected that prices would continue. Yes, they did continue eventually, but only after stopping out majority of the people who thought that the prices would go. So yes, most of the investors, most of the traders were correct in direction, but were wrong with the timing. Correct. So manipulations are always based on market timing. The direction was correct, but the timing of entering the trade was wrong. Now that we were talking about market manipulation, let us look at some more examples to get a clearer understanding, right? Market manipulation, very interesting topic and very important topic as well, correct? Now let us look at an example such as this. So we had an area, uh, wait, let me show you a better example. All right, I think this is a nice area. Let me explain it to you with another example, right? Remember, we are looking at gold. So, everyone who were asking that, could you show us your technical analysis on other products, such as other financial instruments, such as gold? This is exactly what I'm showcasing, right? Let us look at this particular area which has been acting as a support, right? We want to denote it with green because green is the color of support. Now, with this support in place, you can clearly see that prices should be holding the support area. But as and how more number of times the prices were testing, you could see these long wicks, correct? And the long wicks are nothing but manipulation, right? There are people who are taking trades and are putting tight stop losses, right? What is a stop loss? It cuts down your trade so that you only lose a small portion, right? So for those people who are keeping their stop losses, the markets are manipulating. The people who are entering the trades are correct on the direction, right? Let me reiterate it again. People who are taking trades at these levels are correct in direction, but they are wrong in the timing of when they enter. Because if they're placing their stop losses somewhere here, for example, let me put a line so that people can understand what I'm telling. So if the red line denotes stop loss, right? SL stands for stop loss. If this is an area where people are putting the stop losses because they expect that, okay, I want to enter at this particular price and I want to give it a tight stop loss. What is happening is right in front of you. Prices are just going and are stopping our people. Prices are being manipulated. So all these levels are being manipulated, right? It's a cross mark. People who have placed their stop losses are getting triggered. If stop losses are getting triggered, means they have been stopped out. So manipulations are occurring, correct? Were they correct in deciding the direction of the trade? Of course they were right. They were looking for going long. But since they were placing their entries at a favorable area, but keeping tight stop losses, and like I keep mentioning, the market is a zero sum game. What enters exits, correct? So if someone is winning, someone is losing, and if someone is losing, someone is winning. So market manipulations are such where prices are skewed or disoriented only for prices to continue, which the majority of people were anyways planning to and to take trades based on. So I hope people are able to understand what manipulations are, right? I showed you a manipulation example based on a resistance manipulation based trade and a support manipulation based trade. So this is more about manipulations, right? Now we're going to talk about the next advanced concepts. Remember, these are advanced because these are, only for people who have spent a lot of time, a lot of effort in front of the charts. I'm talking of people who have spent more than 500 hours, 600 hours, right? Learning about charts, learning about technical analysis. only they are able to understand from a deeper perspective that yes, manipulations happen, and we have to be sure in how we can avoid such manipulations. So now let us talk about the next concept that we will be focusing on, and they are called as smart money zones, right? So what do you mean by smart money zones? Smart money zones are basically zones that are segregated into two categories. We call them as demand zones, and you call them as supply zones. Now, what demand zones and supply zones are, let me give you a quick understanding of this, right? So, smart money zones are basically compartmentalized into two types of zones: demand zones and supply zones. I'm pretty sure, everyone has had a little bit of experience or a little bit of knowledge when it comes to supply and demand. I'm talking of economics 101, right? The basics of economics. The economy of a particular country or the world, it basically lies on supply and demand. Common sense, right? If a demand for a product is increasing, the prices will also increase. If the demand for a particular product is falling, the price of a product will also fall. Similarly for supply, if the supply is increasing for a particular product, the price will fall. It has an inverse relationship with price. And if the supply is falling down, it leads to an increase in price, right? I'm pretty sure everyone is aware of what we had learned back in school. We had used a graphical representation to understand the curve at which people talk about price and time. Let me just type it out. So we had price and we had time. So when the prices are shifting, right? If we let me just double down the line. So at a particular price point in time, the prices were, for example, at 10 rupees, right? And from there we look at the time at which it was. Now remember, I'm talking about economics 101, right? So it is basic, but it is very important to understand the concept. All right, just let me make sure the lines are different colors so you do not get confused. These are basically demand, right? So let us denote this as D1. And once the price, I will explain it to you, do not worry. So this is economics 101. I just want to make you understand in terms of context. When we are talking about supply zones, demand zones, why are they called supply zones, demand zones, right? So when price at a particular point in time was providing you with a demand at D1, as the demand shifts, the prices also go higher based upon time. That is exactly what I'm trying to showcase. When demand shoots up, the prices shoot up as well. Similarly, when we are looking at supply, right? Now, when we are looking at supply, let me put another color and let me you know remove the denotation. So this is basically supply one, right? And if supply is reducing, right, the price also reduces, correct? So that is the overall context of what we talk in terms of supply and demand. If the demand for a particular product rises, the price rises, and if the supply for a particular product decreases, it has an inverse relationship. Now, enough of the economics 101. Let us just dive into what exactly do we mean by supply and demand based on the charts. All right. As you can see, we are on the daily time frame, and let me pick up a scenario so that I can explain to you. First and foremost, we understand in terms of what is the trend. Now, let us start from this. I hope people can see my mouse and can see the arrows, correct? So we have this uptrend. Now, as you can see, the prices have been quite bullish. But now that the last high, let me do the denotions, let me put the headings. So we had a high, we had a low, and we had another low, right? Now let's not get into higher highs, lower highs. Let me just keep it simple with pivot tones, right? Lows and highs. So now that you had a lower low, right? From the previous low, price created a fresh lower low. So now from a high, we have a lower high. Now the sentiment in terms of bullishness has been reversed and has become bearishness. So this is the first point to keep in mind. How do you understand more about supply and demand zones? We will come into it later, but first understand what is swing, what is trend, because it is very, very, very important to be clear in terms of, is the trend bullish, is the trend bearish. Since prices were in a bullish movement, now how will people understand how is price in a bullish movement? The last area, right? Let me denote it with another arrow. So we had prices which were going sideways. Now prices eventually took out that particular pivot point, right? This is a pivot point. Now that this pivot point was taken out, we can clearly be sure that the price is in an uptrend, correct? The moment the uptrend has price created a fresh lower low, the uptrend has got converted to a downtrend. So this is basic analogy when it comes to swing, to identifying trends and how to know whether it is a bullish trend or an uptrend or a bearish trend or a downtrend. Now that prices are creating lower lows, we are clear that yes, the prices are bearish. So once prices are bearish based on Dow theory, now many people might be aware of Dow theory, but basically it means you take trades in the direction of the trend. Let me just type it out. It's important for people to understand. So Dow theory is basically, I'm keeping it, I'm not using the exact words, but I'm giving you the meaning of what it stands for. It basically means take trades in the direction of take trades in the direction of the trend. That is all. That is the ultimate meaning of Dow theory. Take trades in the direction of the trend. So as you can see that prices have been creating lower highs and lower lows, correct? That means that we should be looking for what? Should we be looking for taking long trades, or should we be looking to take short trades? Come on, write down in the comment box. I'm sure now people that who are understanding, they're saying we should take short trade. So demand zones and supply zones are nothing but areas of price of swings that have potential of holding. Now that the price created a low, the last resist support area has been taken out, right, and has become from support to resistance. Let me write it. The last area, which was support, has now flipped and turned into a resistance. Now, what do we call these zones as? We call these zones as flip zones, right? Now, flip zones are zones which basically a previous support has been taken out. So now that support acts as a resistance, or if a previous resistance has been taken out by bullish candle, that resistance turns into support. So these are called as support resistance flip zones. Now that the prices are continuing, you can clearly see demand zones are zones that are around areas of flip zones that are marked like gears, and they denote that such areas have potential of holding price. Because the swing is bearish and we are looking for taking short trades, these such areas are called as supply zones. I'm giving you the reference of how we are connecting the dots to understand the entire picture. When an important previous pivot point, right, pivot points are turning points, right, has been taken out, right, when support has been taken out, it becomes a resistance, and that resistance area, around that area are zones called as supply. Because if the support had to hold, the prices should have tested the support area and should have continued up. But what happened? rather than support holding price, it got taken out. That showcases that there is a lot of bearish pressure at that level, and that is the reason next time when we have prices which are coming closer to that area, we have structures where prices are holding. You see, prices are holding and prices continue down. This is what a supply zone is, right? Let me show you an example from a demand zone point of view, right? All right, so as you could see, for this particular example, we talked about supply zones. Now we are going to talk about demand zone. You can clearly see that the prices have been bearish, right? How do you know that the price is bearish? We have to go and mark it. So let me use a path. The prices have been creating lower highs and lower lows, right? I hope people are clearly able to understand this. Prices are creating lower highs and lower lows. Let me write the annotation. We have highs, we have lows, right? Now we have lower highs and lower lows. So I hope people are able to understand. Now we are entering into real, advanced concepts. So lower high, lower high, lower high, lower low, right? And this is another low. It's an equal low or a low as we can call. So the last time prices were in a bearish momentum, right? When the prices were in the downtrend, this has been the overall structure of swings. The moment the last swing has been taken out around this area, what is the last area of swing? It's the orange line that I've denoted. People normally refer to it as resistance. So let me put a box. This is an area of resistance, right? Now that area of resistance, what has happened to price? Prices have closed above it, correct? Prices have closed above it. So now that the prices have closed above it, the support, the resistance, that had been marked, all right, let me delete the lower high. The resistance that was holding price at that level has been taken out, has been broken, right? This is called as breakout, right? BO, breakout. So prices have broken out, and now the momentum or the sentiment of price which was bearish has turned into being bullish, right? Now that the prices are bearish, they have been flipped or they have been turned into bullish. So an area, very important information here that I'm giving to you, which is of very, very, very high importance. An area which should have held, right, resistance. Prices had reacted from resistance. So we knew that if prices are coming back to that area, they should hold. But as you can see, prices, when they came to resistance, the red color box, they held for some time. They took it down, right? The prices were pushed lower, but only to be taken out. So the resistance had been taken out. Now that the resistance had been taken out, what did I talk? It became a flip zone, right? So what would we call that zone as? We would call that as resistance, support, flip zone. This is the area which is called as resistance wait, let me just make the box bigger. So this is the area that is called as resistance support. In the previous example, it was a support resistance flip zone. Now it is the opposite. It's a resistance which is converted to a support. So the areas around those structures, right? The area around those structures, let me mark it with another rectangle. So the areas around those structures, which are somewhat like this, right? These areas are called as demand zones, right? What is the basic definition of a demand zone? That now price, that they have taken out supply. Remember, price is just a balance act between buyers and sellers. The more buyers, the more prices will appreciate. The more sellers, the more prices will depreciate, correct? So demand zone is basically where previously there was resistance, or there was a lot of selling pressure, that area has been taken out. So now who are in charge? The buyers are in charge, right? People who can buy and take prices. So next time when prices are coming to the demand zone, an area where now there are more buyers than sellers, that is what is called as a demand zone. And as you can see, prices react to the zones and you get good money. This is the overall definition when it comes to supply zones and demand zones, right? I hope people are able to understand. I've, pardon me for my rash drawing, but I want to get to you, the information in the best and the easiest way possible, right? So these are called as demand zones and supply zones. I've given you very, like, now we are entering into very, advanced concepts when it comes to technical analysis. Remember, you can learn about technical analysis, but it's not just about learning. You have to implement it. You have to spend time. You have to spend hours. You have to, do a lot of revision. You have to, like, do a lot of homework by yourself in terms of analyzing more structures, how demand zones look, how supply zones look, how we looked at price manipulation, how a particular level gets taken out only for prices to reverse back in the direction. Now, last but not the least, let me give you a quick talk about correlation. Right? What do you mean by correlation? Now, correlation is basically relationship between two products, two commodities, two services. Now, we are going to be looking at gold. Why are we looking at gold? Because as you can see, the gold is pegged against the dollar. It is XAU against USD. So, what do you mean by that? If gold is appreciating in value, the prices of dollar should the value of dollar will fall down. Let us understand this from a better perspective. As you can see currently, what is the current swing or sentiment in gold? It's bearish, correct? Now let me go and type Dixie. What is Dixie? It is the US dollar index. And now what is the sentiment in terms of the US dollar index? The sentiment is up. So if gold is going, or if gold is bearish, right? Let me write it in simple words. If gold is bearish, the dollar, right? This is very simple but very crucial to understand. Correlation, right? Let me just write the heading again. So correlation is basically analyzing the relationship between two products, right? Two commodities, such as now we are talking about gold. So if gold is bearish, the dollar is bullish, and vice versa. If the dollar is bearish, then gold is bullish. So it has an inverse relationship. Always understand, if you're looking at the dollar, right? We are looking at the dollar index. So if you can clearly see the dollar is appreciating in value, but if you look at gold, it is exactly doing the opposite. It is falling down. So this is how where you can combine the two. If gold is falling down in value, the dollar will be rising in value, and if dollar is rising in value, gold will be falling in value, right? Now there are two types of correlations when it comes to, you have positive correlation and you have negative correlation, right? Oh, I'm just spelling mistakes. All right, no problem. All right, so we have positive correlation and negative correlation. The example that I talked to you on gold, if gold is falling, then the dollar is rising, correct? If gold is falling, the dollar is rising. So these kind of correlations are called as negative correlation, or the other term for negative correlation is inverse, right? Inverse correlation, positive correlation, or inverse or negative correlation. If the value of one product is rising and to the contrary the value of the other product is declining, then it is called as negative or inverse. And if the product of one product if the value of one product is rising and the value of the other product is also rising, that is called as positive. So let me finish today's live streaming session with an example of positive correlation. I'm pretty much sure everyone is aware about Australian dollar, right? You know, we are Dolphin Markets. We have our offices in Australia as well. So let me talk to you about Australian dollar. Now, with Australian dollar, I'm pretty sure and I'm aware that every one of you is, aware that Australia, if the continent of Australia is here, you have New Zealand right besides it, right? New Zealand is another country with its own currency. So the example of positive correlation is this. For example, if you're talking about New Zealand and Aussie dollar, right? So if Aussie dollar, right? Remember, we are talking about Aussie dollar, right? It's a forex pair. If Aussie dollar rises, then we are comparing it with New Zealand dollar, right? New Zealand dollar also rises, and if Aussie dollar falls, New Zealand dollar also falls, right? So this is what is meant by positive correlation. What I talked to you about gold and dollar, that is inverse relationship. If the value of gold is rising, the value of dollar is falling. Vice versa, if the value of dollar is falling, the value of gold is rising. Those are called as inverse relationships. But when we are talking about or positive correlations, as you can see, in terms of swing on the Aussie dollar, the swing is bearish. Now, if I had to go and type on New Zealand dollar, you can clearly see that the swing is bearish as well, right? So I hope you are able to understand. What you see on Aussie dollar is identical, right, on the New Zealand dollar. Let me show it to people who haven't seen it, right? Let me show it again. If prices are falling on the Aussie dollar, you will have a very similar effect on New Zealand dollar as well, where prices are also falling. These kind of correlations are called as positive. Not positive in terms of rising up, but positive in the relationship between the two. If Aussie is rising, if Aussie dollar is rising, New Zealand dollar is also rising. If Aussie dollar is falling, if Aussie dollar is falling, the New Zealand dollar is also falling. So this is called as correlations. Now you can use it to your advantage. And if you find that, for example, you are getting a trading opportunity on Aussie dollar, you can replicate it on New Zealand dollar because there is positive correlation. And similarly on gold, if you think that the value of gold is going to rise, you can short the dollar, or if you think that the value of dollar is going to rise, you can short gold. So that is the power of correlations. I hope people are able to understand. We have been discussing quite a lot of advanced technical analysis, right? I hope people are able to understand, and I'm very sure, yes, for a lot of you, it might be going quite intense because now we have reached to the peak of advanced technical analysis. But let me give you a quick summary of what we had talked right from the morning. We have been just talking about technical analysis. We were focusing on forex pairs and on the gold markets too. So such pairs, one second, such pairs which are basically such concepts which are basically talking about technical analysis, I had to make sure. And I have been fortunate enough because today being a holiday, we have been focusing on technical analysis. So first session was based on the basic level technical analysis. The second live streaming session was based on mid level technical analysis. And the third session, the session that has currently been happening, which is going to conclude in the next 5 minutes at the max, had been based on advanced. So in today's third live streaming session, we have been talking of advanced level technical analysis concepts such as market manipulation, supply and demand, as well as correlations. So I hope everyone has had a good understanding. I hope everyone is has had a good perspective when it comes to, okay, what is advanced technical analysis. So please, I hope everyone has a great weekend. Yes, we will be concluding in a short time. Today being Friday, I'm pretty sure everyone is more than excited to go and have a relaxed and fun filled evening with the family and friends. It has been a lovely time spending time with you and sharing information. And please make sure to arrive back on Monday. On When coming back on Monday, the markets will be opened. We will be diving back into analyzing and looking out for hot stock recommendations, right? Hot stock money making strategies. So stay tuned for all the live streaming sessions. We have our live streaming sessions all the way from Monday till Friday, right? Monday, Tuesday, Wednesday, Thursday, Friday. And I, Harsh, will personally make sure to provide you with three live trading sessions, right? In those sessions, we will be talking about analyzing the markets, providing you with hot stock recommendations, strategies that can make you money, as well as education. So I hope everyone has had a great time listening to me and has learned a lot of information. Everyone, please have a safe and a happy weekend, and I will catch you back on Monday. So until then, namaste and